All right, everybody, welcome. Today we are diving deep, and I mean deep, into Lloyds Metals and Energy Limited.
LMEL.
LML, yeah, exactly, for those of you in the know.
Mhm.
We've got all their financial reports, and we've got some data from Screener to kind of guide our way here.
Yeah,
And just to pique your interest a little bit, this company is doing something right.
for sure.
We're talking compounded profit growth of 129% over the last 5 years.
Wow.
That's not just growth, that's a full-on explosion.
Yeah, that definitely suggests there's something compelling going on with this company.
Yeah, and they're operating in these sectors that are, very much crucial to India's growth.
Absolutely.
They're mining iron ore, they're manufacturing sponge iron, and they're generating power.
Yeah.
So before we get lost in the numbers here, can you just give us a quick overview of who LMLL is, what's their main gig, and where do they fit in the market?
Well, I mean, you can think of them as a triple threat. Their latest financial report shows that mining iron ore brings in the lion's share of their revenue.
Okay.
We're talking 78%.
Wow.
And then their sponge iron manufacturing comes in second at 19%. And then they round it out with power generation at about 3%.
Okay.
And they're listed on both the Bombay Stock Exchange and the National Stock Exchange of India.
Oh, wow.
So, they're not playing around.
Yeah, they're not playing small ball. And speaking of not playing small ball, let's talk about those impressive financials.
Right.
I mean, you mentioned compelling story, but I think these numbers tell a whole saga, don't they?
You do, yeah. Yep.
So walk us through some of these really eye-popping figures.
So their revenue has more than doubled between FY23 and FY24, jumping from 3,392.31 crores to 6,521.65 crores.
Wow.
And their profit before tax also saw a huge jump, leaping from 796.72 crores to 1,726.71 crores.
Hold on, I need to catch my breath. I mean, that kind of growth, you usually reserve that for like Silicon Valley startups.
Right.
Not, a company that's kind of rooted in these more heavy industries.
Yeah.
Like mining and things like that.
Yeah, for sure.
So what's fueling this rocket ship?
Well, I mean, I think there's a few things. Definitely the demand for iron ore is a contributing factor, especially from industries like construction and infrastructure.
Mm-hmm.
But I think it's important to look beyond just those trends.
Okay.
Their consistent return on equity, over 50% for the past decade, suggests that they're really doing something strategically brilliant.
Okay, so high ROE, that's good, right?
Yes, that's very good.
But I think for some of our listeners, it might be helpful to unpack that a bit.
Okay.
I mean, what does a high ROE actually tell us about how LML is managing its business?
So think of it this way. ROE is a measure of how efficiently a company is using its shareholders' money to generate profit.
Okay.
So a consistently high ROE like LML's indicates that they're making smart investments and generating strong returns for their investors.
Okay.
Which is obviously a good thing.
Yeah.
It's definitely a green flag if you're looking at them from an investment perspective.
Yeah, and here's another green flag, and this is pretty amazing. LMEL is practically debt-free.
Yeah.
I mean, that sounds great, but can you break it down for us a little bit? Why is that such a big deal, especially in today's economic landscape?
Imagine you're trying to build a house in a storm.
Okay.
Having a mountain of debt is like carrying, a heavy load of bricks.
Yeah.
It weighs you down, it makes you vulnerable, and it limits your options.
Yeah.
So LMEL, on the other hand, is nimble and free to adapt.
Right.
They can invest in new opportunities.
Yeah.
They can weather economic downturns without, drowning in interest payments.
Yeah.
And they can potentially offer even higher returns to their shareholders.
Wow. So being debt-free in a volatile market like this is like having a superpower.
It is. It really is.
So we've got impressive financials, we've got a debt-free balance sheet, and they're operating in sectors that are vital to India's growth story.
Yeah.
But wait, there's more.
There is.
Their Q2 FY25 report hinted at some interesting developments.
Yeah.
A qualified institutional placement, or QIP, of equity shares and the allotment of convertible warrants.
Right.
What's the scoop on that? What are they up to?
Well, I mean, these actions suggest that they're looking to raise capital.
Okay.
And, that's always a sign of ambition. They're clearly not content with just maintaining the status quo.
So are they gearing up for like a major expansion and maybe a splashy acquisition? Could they be eyeing a new market altogether?
I mean, there are a lot of possibilities.
Yeah.
And speaking of new ventures, they've also dipped their toes into the pellet trading market.
Oh, interesting.
specifically by procuring pellets from Mandovi River Pellets Private Limited.
Okay.
And this tidbit popped up in both their May and September financial reports, so it seems like they're serious about it.
So they're expanding, they're diversifying, they're raking in profits. But let's be honest, no company's perfect, right? Are there any wrinkles in this otherwise pristine picture? Anything that's making you raise an eyebrow?
I think there are a couple points that warrant a closer look.
Okay.
Well, for one, their stock price is currently trading at, like, a significant premium compared to its book value.
So they're a bit like that trendy coffee shop everyone's raving about.
Right.
Long lines, high prices, but is the coffee really that much better than the place down the street?
Exactly. Book
Okay.
value basically gives us, like, a snapshot of a company's net worth. What's left if they sold everything and paid off all their debts.
Okay.
So when a stock is trading much higher than that,
Yeah.
it could be a sign that the market is, like, overly optimistic about the company's future prospects.
Okay, so it's not necessarily a bad thing, but investors need to ask themselves, is the hype justified?
Yeah, exactly.
What else is on your radar?
The other point is that promoter holding has decreased by almost 6% over the past 3 years.
Now, for our listeners who aren't fluent in finance speak, can you remind us what promoter holding is and why this dip might be noteworthy?
Sure. So think of the promoters as, like, the ship's captains,
Yep.
the founders who steered the company from its early days.
Right.
Their stake in the company kind of reflects their confidence and commitment,
Mm.
right? So when that stake decreases,
Yeah.
it raises questions about their long-term vision.
So it's not necessarily a red flag, but it's something to watch.
Yeah.
Are they diversifying their own portfolios, or is there like a deeper shift in their commitment to LML's future?
Right.
These are the kinds of questions I think investors should be asking.
Exactly. It's all about, like, piecing together the puzzle,
Mm-hmm. Yeah.
Strong financials and a debt-free balance sheet are fantastic.
Absolutely.
But we also need to consider things like market sentiment,
Mm-hmm.
potential overvaluation,
Yeah.
and, the long-term vision of the company's leadership.
It sounds like LML is a bit of a paradox. A company that's like firing on all cylinders, yet facing some intriguing question marks.
Yeah.
What does this all mean for our listeners who might be considering LML as an investment opportunity?
Well, I think LMEL is a really fascinating case study.
Okay.
They've clearly demonstrated strong performance
Mm.
and strategic decision-making, but as with any investment,
Right.
it's crucial to conduct thorough research, look beyond the headlines,
Yeah.
and consider all the factors at play.
Don't just jump on the bandwagon because of impressive growth numbers.
Right.
Look under the hood, examine those financial reports, and ask yourself, does LML's story align with my investment goals and risk tolerance?
Absolutely. That's the key takeaway here.
Yeah.
Don't just follow the hype.
Right.
Be informed, be critical, and be your own advocate when
Yeah.
making investment decisions.
Speaking of being informed, I can't help but think about the bigger picture here.
Yeah.
LML operates in these sectors that are heavily influenced by global demand for metals and energy. I mean, their success might be a reflection of, like, larger trends at play.
Yeah.
What are your thoughts on this?
Well, what's fascinating to me is that LML's performance could be like a harbinger of what's to come for these sectors.
Oh, interesting.
Are we witnessing a surge in demand that will continue to propel companies like LML forward?
Mm-hmm.
Or is this just a temporary blip on the radar?
And let's not forget about the sustainability elephant in the room.
Right?
The world is grappling with, how to balance economic growth with environmental responsibility.
Yeah.
How might LML navigate this complex landscape?
Yeah, that's a crucial question.
Yeah.
Will they adapt and innovate to meet the evolving demands of a world increasingly focused on sustainable practices?
Mm-hmm.
Their future success might very well hinge on their ability to address these challenges head on.
All right, we've covered a lot of ground today, from impressive financials to potential concerns, and even pondered the future of entire industries. Before we wrap up, let's recap the key takeaways for our listeners,
Okay.
so they can walk away feeling empowered and ready to explore further. Okay, so we started off talking about LML's, phenomenal growth.
Right.
129% compounded profit growth over 5 years.
Yeah, that's impressive.
It's mind-blowing.
For sure.
This company they're hitting it out of the park.
Yeah, they're playing a really crucial role in the Indian economy.
Mm-hmm.
Their mix of mining, the sponge iron manufacturing,
Mm-hmm.
and the power generation gives them a really, really strong foundation.
Yeah, and their financials, I mean, they tell a compelling story.
They do.
Revenue more than doubling in a year,
Right.
profits skyrocketing, a
Well,
return on equity that's been consistently above 50% for a decade.
too amazing.
I mean, it's clear they know how to generate returns.
They do.
And then on top of that, they're operating with practically zero debt,
Right.
which gives them incredible flexibility.
Yeah, especially in a world where a lot of companies are burdened with those high interest payments.
Exactly.
Yeah.
And then we kind of dug into some of their recent moves, raising capital through a QIP, convertible warrants.
Right.
It suggests they've got some pretty ambitious plans in the works.
Yeah, they're not sitting still.
Yeah, whether it's expansion, acquisitions, or who knows, maybe something completely unexpected.
Could be. Yeah.
But we didn't just focus on the positives.
Right.
We also talked about that their stock is trading at a premium compared to its book value.
Yeah, it's something to keep an eye on.
Which, might lead some to think, is the market getting a little ahead of itself?
Yeah, it's a good question.
And then there's that dip in promoter holding, which, I mean, again, it's not necessarily a red flag, but it does raise some questions about the long-term commitment.
Yeah, for sure.
Of the company's founders.
It's something investors should definitely consider.
Absolutely. Yeah.
Yeah.
So I think the takeaway here is that LMIL, I mean, they're a company with a lot of potential. But, it's important to look beyond the surface and make informed decisions based on, thorough research and careful consideration.
That's right.
So as you all continue to kind of explore the world of LML and, the broader metals and energy landscape, just remember everything we've talked about today.
Absolutely.
Dig deeper into those financial reports, pay attention to the market trends, and, think about the implications of some of those recent capital raising moves.
Yeah, and I think most importantly, think critically about how companies like LML will adapt and innovate to meet the challenges of, it's a rapidly changing world.
It is.
Especially when it comes to sustainability and environmental responsibility.
That's where the real story unfolds, right?
It is.
How will they navigate the complex demands of economic growth while also, contributing to a more sustainable future?
It's the big question.
It's the big question, and that's the question we'll leave you with today.
Keep those minds engaged.
Yes.
Stay curious, and until next time, happy deep diving.
Absolutely. Thanks for joining us.